Hey guys, ever since I posted my last video on the 6 most common HSA mistakes, and these 6 mistakes are the things that people often overlook, I got so many questions around how to report tax as a California or New Jersey resident. Because even though the HSA is a triple tax savings account on a federal level, it's actually not tax exempt if you reside in states like California or New Jersey for both contributions and earnings. And if you live in states like Tennessee and New Hampshire, the earnings portion is also taxable after you reach a certain level. If you don't live in any of those states, you can stop watching this video now, but if you do, you're in luck, because I'm going to save you all the trouble of figuring this out manually by teaching you exactly how to calculate the earnings portion. Remember, the contributions will be taken care of by the Form 5498SA, which can be downloaded from your HSA portal, but the earnings portion is something you need to calculate manually. So I'm going to teach you guys exactly how to calculate earnings, including interest, dividends, and capital gains, and more importantly, how to submit it via Turbotax. And let's say for some reason you forget about doing this in the previous year, don't worry, because I'm also going to show you guys how to submit amendments in this video. So make sure you watch this video all the way till the end. Without further ado, let's get right into it. Alright guys, let's start with interest, which is the easiest to calculate. All you have to do is you go into your HSA's year-end statement page, where you're going to download your 2021 year-end statement. And within that, you'll see an interest line. Mine is listed at 0 because I invested all my money into index fund. You should also do the same, but just in case you left anything in checking, this is where you might find the interest that you have collected for this year. Now let's move on to dividend. For dividends, you want to go to your investment tab, scroll all the way down where you're able to find your investment summaries for the calendar year. For us, it's 2021, so you want to make sure you select January 1st, 2021 as the start date and December 31st, 2021 as the end date. Here is where you find the dividends. Last but not least, for capital gains, it's the most complicated of all. Unfortunately, not all HSA providers are able to provide you with this information. Luckily though, HSA provider such as HealthEquity provides you a capital gains income calculator. So here's a link for that, but let me just walk you guys step by step through it. If you have enjoyed this video so far, don't forget to give it a big thumbs up because it's really gonna help me out with YouTube algorithm. Now let's move on to the next part. So the first step is to go to your investment portfolio tab and pick the exact same start date and end date and click on download, which will give you a CSV file. The second step is to upload the investment transaction file you just downloaded. And then select a cost basis. So there are two options, either the average cost basis or the FIFO, or also known as first in, first out. Let me just quickly explain the difference of the two. The average cost basis method essentially looks at all the total number of dollars you invested and divide that number by the number of shares you bought. So for example, you have $10,000 in investment, own 500 shares, then that would mean a $20 average cost per share. And the FIFO, as the name suggested, it's actually gonna take into account your earliest investment. Just for comparison purposes, let's look at whether there's a difference. Let's also make sure you're selecting the right tax year. And then next, you want to check this disclaimer box. Click on calculate. So here, it's going to tell you again, this is a dividend income, we already know. And then the short-term capital gains is essentially what you need to report. There's nothing on the long term because everything has happened during a 1-year time period. And then just for fun, let's also look at FIFO. Our short-term gains a little bit higher, not a big difference. Obviously, this makes sense because FIFO actually try to calculate capital gains based on your earliest investment, and given our investments growing, that's why you see a bigger difference. It doesn't really matter which method you pick as long as every year you're consistent with your cost basis method. Now you've understood how to calculate these three things. I'm going to show you quickly how to do that in TurboTax. TurboTax website, make sure you click on the state tab and press on start, HSA start. Here's where you enter your health savings account earnings. So 0. Voila. Let's say if you forgot about filing for the previous year, there's also a way to amend it. That's how it looks like. Whether you have reported tax using Turbotax on a desktop or online, you want to use the exact same tool when you do the amendment. So I'm going to show you guys what it looks like for the desktop version. You want to go into California state and then click on the HSA earnings. Here you want to enter the 3 amounts, include interest, dividends, and capital gains. Then you can proceed on submitting your amendment. Quick disclaimer, I'm not a CPA, so make sure you vet everything I've talked about in this video with your CPA before making all these changes. If my video has helped you in any way, shape, or form, don't forget to give it a thumbs up and subscribe to my channel. I'm also gonna put out a curated playlist right here so you can check out more HSA or fire related content. See you guys in the next one. Bye.